How's it going, guys? Hope you're all well. In today's video, I'm going to go through a simple scalping strategy that you could use to, pass prop firms like Ftmo, my Forex funds, and so on. So what I'm going to do first of all is I'm going to go through the strategy, explain all the components that you need to know in order to trade this strategy, and just explain it a little bit and some rules that you will need to follow. So first of all, what we will be doing is we will be following price action on the 1 minute, 2 minute, 3 minute, 4 minute, or 5 minute, or you can, use a mixture of all five. And then what you will do is you will follow a certain set of rules in order to find a trade. And you might now be thinking, will I take a lot of losses if I'm following, price action on such a low time frame? And the answer to this is no, because we look for a certain specific set of rules. And actually, if you trade this way, what you will notice is these setups don't come very often. So what you might want to do is you might want to trade more pairs. And the pairs that I recommend are Euro USD, GBP USD, AUD USD, USD CAD, and New Zealand dollar. So they are the currency pairs that I do recommend trading on. These are the ones that I found the price action to be the most clean on. And yeah, like I said before, the setups don't actually come that often, so you're not going to be taking loss after loss after loss following the price action. So what I'm going to do now is go through the rules that we will follow while trading this strategy. So first of all, what we'll need is we will need rule 1, which will be a break of structure. So we broke a structure here, and then we will need rule 2, which will be a mitigation of a order block right up in here. And what we are essentially doing is we are essentially following order flow and lower time frame order flow. So what order flow is mitigation. So if we get a break of structure to the downside, we then get a mitigation of this order block right here, and then we get another break of structure, which is essentially rule 3. So rule 1, break of structure. Rule 2, mitigation. Rule 3, break of structure. And then what we can do is we can look to set an order on an order block around this area right here. And then we can target at minimum these lows. Or if you're following, let's say 1 minute price action, or the 1 minute time frame, what you can do is you can target at least 5R, because what I've noticed is if you get the overall trade direction right, the trade will run to a minimum of 1 to 5. So if I just go ahead and mark this out, what we've got here is we've got rule 1, which is a break of structure. So we have got a boss. Rule 2 will then be a mitigation. So we've got a mitigation of an order block right up in here. So mitigation. What we will then get is we will get rule 3, which again is a second break of structure. So another boss, and then what you can do is you can set an order on an order block right here. So what you will need to know is if the setup isn't clear. So for example, if you don't get a clear mitigation right here, this will make the trade invalid, because you want to be trading stuff that is clear to you. You don't want to be trading messy price action, because if you do that, you're going to be taking unnecessary losses. So you want to make sure that we are trading, clean price action right here. And then what you can do is you can set a limit order on the 50% if you want to do that, just to reduce your stop size and obviously increase the risk to reward. And then at minimum you will target somewhere down here, which obviously the risk to reward on this trade will be massive, but usually it's around 1 to 5. Or what else you could do is, if you have the seconds time frame, you could drop down to, let's say, the 5 seconds and take a confirmation entry from in this area right here. And this is just the overall idea, and these are the rules that you will want to follow. So if I just go ahead and put it down, so we've got rule 1 right here, and then you can go ahead and take a screenshot or whatever you want to do. We've got rule 2. So we've got rule 2, and then we've also got rule 3, which is a second break of structure. So as you can see, that is the overall idea. Rule 1, rule 2, rule 3, entry. So what I'll do now is I'll move on and show you a couple of examples. Hopefully then you can put it into perspective a little bit more, then you can go onto your charts and practice this yourself. So first of all, we will go to Euro USD. So as you can see right here, what has happened is we've had a pullback, as you can see, and we have actually swept liquidity in this example. So we swept liquidity, then we've broken structure. So we've had a break to the downside. So a break. What we've done then is we've mitigated an order block. So we've mitigated this candle right here. So then we can take our mitigation. So we will go, so now what we've got is we've got our mitigation, which is a mitigation of this order block right here. So mitigation, we have then come down and then broken structure again, and then you can enter off this buy to sell candle right here. As you can see, I've entered on the 50%, and the minimum stop loss I would use personally is a 2 pip stop loss. You could have got a stop loss around 1.5 pips if you wanted to, and you could have increased your risk to reward. But for me, 2 pips is, low enough. What you could do then is the minimum target would be this 1 to 3, the bottom of this candle right here. But as I said before, majority of the time, price will run 1 to 5. So what you've got is, obviously, you've got liquidation there, which is an extra confluence. So you've got a liquidation of these highs, which is a sweep of liquidity. And what you want to be doing is, obviously, trading away from the sweep. What we get then is rule 1, break a structure to the downside. We get rule 2, mitigation. We get rule 3, break a structure to the downside. And then we can set our entry. So that's how it would look in, real life market conditions. And then I've got an example on USD CAD. So what we've got here is we have got a breakout structure. So if I just mark it out, breakout structure right here. And you want to be noting that we are having breakout structures with a body close. So if it's not a body close, then you don't want to be, deeming it a breakout structure. We need to see a clean body close below this low here in order to, obviously mark it as a breakout structure. We then get a mitigation. So we've got a mitigation right up in here, mitigation, and then we get our second break of structure. So as I said before, obviously you want it to be a body close. So obviously we break below here, which is not a body close, so that's not valid. But then we get a body close below here, and then what becomes is these highs here just become liquidity. So we've got liquidity. So these highs here just become liquidity in order to fuel a move to the downside. And as I said, the minimum target would then be, your most recent low, which would be a 1 to 5.28. So you could obviously target 1 to 5, and you would actually hit 1 to 5 before a break of structure right here. And again, as you can see, rule 1, mitigation, rule 2, rule 3 is a break of structure. And then you're obviously valid to take an order. I would enter on the open of this example right here, because as you can see, I've refined my POI to this wick, as obviously, this is not very clear, and obviously there will be stuff within wicks, and I've just refined it down. So if you end up doing something like this and the POI is really, really small, I would recommend entering at the open. So last but not least, we've got an example on AUD USD. So as you will notice here, we've got a similar kind of example as Euro USD. So what we've got is we've got a liquidation. So we've got a sweep of all these highs right here. So we've got a liquidation. As I said before, this is not a requirement, but it's just an extra confluence. And then what we get is we get a break of structure to the downside. So break of structure to the downside, then we get a mitigation. So we get a mitigation right there. So we mitigate this buy to sell candle here. Then what happens is we come down and then we break structure again. As you can see, we've got a little bit of liquidity here, and what you could do is you could refine it to this wick here, but I took in this bearish candle just for the simple fact is, it's not too clean in this example. But like I did say at the start of the video, if it's not clear to you and you've not tested it to a point where you're happy to take trades like this, you might want to wait for a more cleaner example. So what you might want to do in this example is you might want to set your order at the open, which is absolutely fine, and you can still get a 2 pip stop by covering this high. Then your minimum target would be this low, or you can target 1 to 5. Like I said, a lot of the time it will target 1 to 5, and it will hit 1 to 5 quite comfortably. And then what you will notice is price does continue down, and the peak of this move would be around 14R. So what you could do if you want to is you could take, like 80% off your position right here, and then you could leave a runner down to, sort of these lows. You might want to leave a runner till 10R, get a little bit of extra, risk to reward in, or you could just hold it as long as you want. So you could hold it and leave the 20% of the position running, because sometimes what you will notice is you will take a trade from here and it will just continue, sort of way down here, and you could end up getting like a 100, a 1 to 100, or a 1 to 50, or a 1 to 40, whatever it may be. Price can continue for a really long time, so you need to decide yourself whether you want to take partials at like 80% partials at 1 to 5, or if you want to just close out full TP right there. So that's just the overall strategy, and it's a really good strategy to follow. It's really simple. You don't really have to know really technical things in trading to trade this strategy. And like I've said, this strategy could help you pass, Ftmo, my Forex funds, any prop firm out there, this strategy is capable of passing. So that's just about it for today's video, guys. If this video did provide you any value, if you are going to trade this strategy, if you're going to backtest it, please let me know in the comment section down below. As always, if you have any questions, feel free to drop them down below or send me a DM. And without further ado, guys, thank you very much for watching, and I'll see you in the next one.